Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is March 19th here, Tuesday. Today we're going to take a look at Marvell. This is a technology company out of the technology sector. Let's jump right in. And if you are new to the channel or you just want to help me out, go ahead and hit that thumbs up down below if you find any value in this content. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hit the notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the videos. Is Marvell in your portfolio? Let's keep on rolling now that we've got that out of the way, and appreciate all of you who have taken the time to do that. Again, subscribing really does help out the channel, and share with anyone you think might find value in this content. On this channel, we do cover dividend growth investing. So if you know any dividend growth investors out there, go ahead and forward this over to them, and let's spread the word. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level. It is also how I set up these videos. So we're going to run through this criteria here in this video, and we do these Monday through Thursday stock pick of the day videos where we take a look at a stock that's pulled back on the day. You can pause this and go through this to understand it a little better, but again, that's exactly how we're going to run through the video here today. Now back to the video. Let's check out www.marvell.com if you want to know more about the company. Again, that's www.marvell.com. That is their homepage where I pulled this information from. Today, Marvell optimized silicon powers AI, cloud carrier, automotive, and enterprise infrastructure with a foundation built on breakthrough innovation, cutting-edge technology, and deep system-level expertise. Marvell's networking, accelerated compute, storage, and security solutions play a critical role in enabling AI applications and driving advancements across solutions. I think AI is the new buzzword right now. But they're really a technology company. They make their own chips, microchips, computer chips. They have their hand in the cloud networking, right? Compute, data processing unit, security solutions. Here's some of their other networking: automotive, coherent DSPs, Ethernet controllers, Ethernet PHIs, Ethernet switches, linear drivers, optical modules. You can read through this: storage, custom. So they'll work with your business on a custom level to see what your needs are and provide a more custom approach to your particular business. Government solutions, so they do have their hand in government, right? So a technology company, right? Let's keep rolling. Well, the reason we are taking a look at them, down 3.18% on the day. We are talking about Marvell Technology, ticker MRVL, out of the technology sector. Closed out the day at $65.06. Looks like they're down a little bit more in the after hours here, at least whenever I pull this information, almost 5 o'clock. 52-week low as $36.90, as high as $85.76. They are leaning more towards their 52-week high than their 52-week low. Average volume is 13.6. Today's was 19.4. A lot of volatility throughout the day. Market cap of $56.342 billion. So they're not a small cap per se, but they are not a large cap either. Kind of floating in the mid cap range there. A beta of 1.5. So they are more volatile than the overall market. And again, you can see that volatility throughout the day here. Did not have a price to earnings ratio, which leads me to believe it's in the negative. EPS is negative 1.08. That's never good to see. So this looks more like a technology growth company, right? So you're betting on future growth here and future earnings per share growth as well. Earnings sometime between May 23rd to May 27th. For dividend yield, now this one has a very low dividend, 0.24, so only 24 cents, with a very low dividend yield, 0.36. So not much of a dividend at all here, really. All right, they're paying a little bit of a dividend, but again, this is probably more in line with a growth company. Ex-dividend date, April 11th. So we are coming up on that next month. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $88.37. So again, they see some price appreciation as far as price per share here. And that's probably more in line with what you would be getting for a company like this. Again, you're not in it for the dividend. I mean, that's a real low dividend. Now let's look at dividend yield theory and see if this one's potentially undervalued. To do that, we'll take a look at their 5-year dividend yield average, which is 0.6%, a little higher than what they are currently, and compared to its current 0.36. And since their current is lower than their 5-year average, that speaks to overvaluation. So at least according to dividend yield theory, this one is potentially overvalued. Now, for high growth companies, that typically is not the greatest metric to use because you will run over with a lot of growth, right? A lot of times it just does not make the dividend yield theory very useful on these type of companies, because you're really looking, again, you're not looking for growth in the dividend, you're looking for growth in the stock price. So to me, I mean, this would be such a low dividend yield, I wouldn't be interested. But for some of you out there looking for, a growth company with maybe that pays a little bit of a dividend, this might be something you're interested in. Now, they do have a very low payout ratio, 11.01%, so they have a lot of room to increase that dividend over time. Ex-dividend, I don't even know why, to be honest with you, with the PE ratio, price to earnings negative, earnings per share negative, I'm not even sure why they're paying a dividend. They should just cut off the dividend and reinvest back into the company, but maybe this is a way they're trying to entice some people in. Ex-dividend date, again, is going to be April 11th. They're going to pay out on May 1st. I'm not sure. I think they might be a quarterly payer. We'll see that in here a little bit. Now we're going to take a look at free cash flow. Now, in the financial sector, where we're going to go to look at free cash flow, a lot of good information. You can take a look at the balance sheet, their income statement, their debt to equity ratios. Is their revenue growing over time? And it better be. It better be growing over time to get this out of the negative. Earnings per share needs to be growing significantly to get this out of negatives. Are their revenues growing or are they decreasing? Which they definitely better be growing to get this one is probably more on the speculative, tech company that you need a lot of growth here. For our purposes, we're going to look at free cash flow because you want growing free cash flow. Dividends are paid out of free cash flow, and usually when you have growing free cash flow, you have growing dividends. 2021 they had 697 million in free cash flow. 2022, bit of a drop down to 632. Jump up in 2023 to 1 billion. Further jump up so far, it looks like, well, a little lower in 2024. But we're not done with 2024 yet. So far it looks like they're posting about $1 billion. But if you look here on the line above, they are repurchasing shares. Repurchased a little bit in 2021, nothing in 2022. Big jump up in the repurchase of shares in 2023, and from 115,000 and 150,000 so far in 2024. So it does look like we've got growing free cash flow. You could account for this this bit of a drop from 2023 so far to 2024. You could account for that in the repurchase of the shares so far, and overall from 2021 to now, definitely growing free cash flow. So good to see growing free cash flow. Maybe there's some hope for this company after all. Now let's jump over to stockanalysis.com. Now I recommend more than one source. The one on the previous page was Yahoo Finance. This is stockanalysis.com. You pick any sources that you like. Just look at 2-3 sources so you can make sure the information you're getting is accurate and up to date. Now they have 28 analysts that have taken a look at this. They call it a consensus buy or a strong buy, not even a buy, a strong buy, right? This would be a strong sell, hold, buy, strong buy. So they call it a strong buy. The 28 analysts here. Consensus strong buy. So maybe there's something to this one, but again, this would be for maybe some of you younger folks looking for more growth. Definitely not looking for the dividend yield on this one. Low estimate of $65, which is currently right up against that, and that would be a 0.09% drop from where it currently sits to get there. Average estimate of $86.36. That would be in line with what we saw with Yahoo Finance on the previous page, and that would be a 32.74% increase. And if it happened to hit their high, that would be a 53.7% increase. All the while, you can collect that 0.3% dividend yield. Again, not very much there. Now we're going to look at return on equity. I typically like 10% or better. These do not look good to me. Return on equity, negative 6.10%. Return on invested capital, negative 2.99%. I like 10% or better. So again, this looks like a growing tech company where they're reinvesting all their money back, and besides what they're paying in little dividend. That's why it's surprising me that they're even paying a dividend. If you've got this kind of return on equity and return on invested capital in the negative, you should be just dumping all your free cash flow back into the business. Now, I like earnings growth, estimated earnings per share growth at 5%. They don't have anything listed. Again, it may be negative. Revenue is forecasted to grow 8.78%, so that's one positive. Overall, again, maybe someone can drop in the comment section down below if they know more about this company. I don't know much about it, but to me, this seems like more of a tech company, growth company, and I'm not sure why they're even paying a dividend. Let's keep going and look at the dividend real quick. They are a quarterly payer. Looks like they pay out in the January, April, July, October frame frame, so I don't mind that. Not a lot of companies pay out in the January, April, July, October time frame, but their payout ratio, they don't list it. We saw 11% on Yahoo Finance, and no dividend growth. I went back to several years beyond 2021. They've been at 6 cents per share ever since they started paying a dividend. And again, it's kind of odd that they're even paying a dividend. No growth in the dividend, just someone decided they wanted to pay 6 cents in dividends. So, I mean, if you're looking for a tech company more on the growth side, this one might be worth it. You definitely want to do more research on this one. Again, not real familiar with the company, but they're a tech company that's paying a little bit of a dividend. So there you go. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think. Is Marvell in your portfolio? Is it one that you are watching? Is it one you're avoiding? Is it one you're selling? Let me know in the comment section down below. Again, looks like more of a growth company that pays a little bit of a dividend to me. Not one that I would really be interested in, but maybe some of you out there know more about it than I do. Love to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Marvell you'd like me to cover in the Stock Pick of the Day series, it needs to pay a dividend. I don't cover tobacco stocks, so drop them down in the comment section if you have any suggestions, and I'll try to work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Events involve risk and candid money. It's never invest any amount not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.